The UK property market has bounced back following the recent interest rate cut. A lot of press reports recently, new homes bounced back after election doldrums. That's because the things tend to slow down before an election. I don't know why. It's a two-horse race. One's going to win, one's going to lose. Everyone knew who was going to win, but I don't know why that would stop people going out and buying stuff, but it does somehow. But it seems to have picked up now, and Rightmove has reported a 19% rise in new buyer inquiries. First-time buyer inquiries are up, so people are starting to come back in the market, as they generally do in the summer. But anyway, it's good news for the property market. I would take it with a slight pinch of salt, because all the people reporting on this are, of course, involved in the property market, so they have a vested interest in, pumping up the market. Yes, things are getting better now, and everyone's happy. Now, interest rates went down by 0.25%, and many people think, great, now we're going to see further drops in interest rates this year. However, then we had the bad news that inflation had risen from 2%, which was the Bank of England's target, to 2.2%. Doesn't sound like much, but it's 10% more. And when you bear in mind that at the last Monetary Policy Committee meeting, it was touch and go whether a lot of people were voting against a rate cut, but it got through. So now that inflation is up again, and Bank of England have warned that inflation hasn't gone away, do you really think that they're going to cut interest rates at the next meeting? Personally, I don't think so. It might happen. Most of the experts are predicting that rates will remain the same. Some are saying, yes, there might be another cut. But next year, they're talking about interest rates coming down as low as 3.5% in 2025. So that's good news in general, but for the millions of people who are coming off of fixed rates this year, and one of my deals is coming up for renewal in October, it's not really great news, because I was hoping that rates might drop a little bit further, but it hasn't, and fixed rates are still staying in the average fixed rates are still staying at over 5%. There are deals around at 4.74, 4.8% on 2 or 5 year fixed rates, but watch these hefty fees that they put in as well. Some fees are 3, 4, 5, even £9,000 fees, which are a complete rip-off. I only found out recently that you can get a better mortgage deal if your EPC rating is A to C. I've got a property where it went into a D, and they said, well, if it was a C, we could have got you this rate. Why, I don't know. The lender seems to like that. But that's the thing on mortgage rates. So if you're coming off a fixed rate, I'm taking the view that I'm going to secure my fixed rate now, even though I've got time before October. As I've talked to my brokers, you should talk to your broker and see what deals are out there. You can usually secure a rate now, and then if it comes down a bit more, you can always go to that other rate before you actually complete on the deal. So I'm securing a rate now, because I don't think rates are going to come down much further, and I think the lenders had already factored in a rate reduction before they reduced their mortgage rates, because you have the Bank of England rate 5%, but mortgage rates are different. The lenders have this deal and that deal. The worst deals are usually the standard variable, which can be over 7%. So if you're coming off a fixed rate and you don't refix, you're going on to a standard variable, which can be 7.25 in some cases. I think Santander was certainly in that region. So you've normally got to fix. And funny enough, the lenders themselves, they don't really offer a better deal for their own existing borrowers. They say, well, you've got this or that, take it or leave it. And most people say, well, I'll leave it, I'll go and remortgage, which is more of a hassle for them, and they've got to pay fees, and some lenders will do it fee free, but you've got legal costs and that sort of thing. It'd be nice if the lenders treated their existing customers a little bit better and said, okay, I know you can get a deal over there for this, why don't we match that, and then we keep you as a client, rather than then going out and fighting. They're all fighting for new clients in the market, when they've got their own clients which are walking away from them because they're not offering a better deal. Recently I was offered a horrible deal by the Leeds. It was a terrible deal. I said, well, you can just stuff it. I don't want that deal. And another lender, I've always found this, they don't treat their own clients very, very well. Another point about property sales. A friend of mine was trying to sell a property for over a year now in central London, in the Westminster area. It's a lovely little flat, purpose-built block, in a beautiful block, concierge, gym and that sort of thing, parking underground, right near the Houses of Parliament. Couldn't sell it. Had one or two inquiries from Chinese buyers who sort of messed him around a little bit, backed out, and then, you know, it just sort of stuck around, and he was living abroad, then comes back. But recently he's had a buyer now. Just recently, today he told me, I've got a buyer for the flat, and you know, this was a flat selling at near the £1 million mark. He's had to reduce the price a bit. He's tried different agents, but it just wasn't moving for the last year. But now it's kind of picked up. It's strange really, because with inflation going up, you think, you know, that's going to dash the hopes of an interest rate cut, but somehow the market has reacted. There was another study done by some organisation said that the UK was the slowest to complete on a property transaction, average of 111 days. America was the fastest, it's just over 50 days. Well, we all know that because the legal process here is very, very slow. That's because when you put an offer in on a property, they say, okay, we'll accept your offer. Then you start the legal process. Then you start getting your mortgage and all that sort of stuff. And that could fall by the wayside along the way. Maybe the legals are not right, or maybe the mortgage doesn't work out, or one of you can change your mind. So things do drag on, and then you're in a chain of people. In countries like the US and Australia, things move, you know, much, much faster, and we're the lowest out of the developed world countries. Just want to talk about first-time buyers are coming back in the market, which is a great news. I think a lot of landlords are pulling away from the market because of Labour's new Renters' Rights Bill, and you can see a video on that. If you click the link below, you can see what Labour are planning to do with their renters' rights, taking away Section 21, giving tenants more rights, more red tape, possible rent control, longer term tenancies, all that sort of stuff. And also because of Section 24, talking to a lot of people following my videos about that this Section 24 tax is killing them. You know, they're losing money on properties that were previously giving them a little bit of revenue because of the high taxes. So if you're affected by Section 21, do drop me a line, charles@charleskelly.net. And please like and share this content. Please try and get it out there, because if you find it useful, like and share. And then if you subscribe to my channel, you'll get lots more information like this. Just finally, energy prices are due to go up. This is what Ofcom are reporting. This is to do with the government energy cap. I won't go into a lot of boring detail on it, but energy prices are likely to go up soon. So if you're looking at fixing your gas, electricity, now is the time to do it. So go onto these comparison sites and try and fix it, or fix it with your existing supplier, because they say prices could go up by nearly 10%. So that's it for now. Do contact me if you need any help with Section 24 problems, tax issues for landlords, and do check out my webinars, which I do most Wednesday evenings, 7 p.m, absolutely free, and I'll give you 3 steps to successful money management, help you to really get control of your finances and then start to build real wealth. It takes time, but start to build real wealth through investing and using leverage. The more I find out about money, the more I learn about money over the years, I realise that a lot of it is up there. It's in your mindset. It's so true about so many things. What you think about money, how you feel about money. You know, what do you think about money? What is money? You know, what do you think about wealthy people? Do you think they're evil? Do you think they're rich fat cats? Or how do you feel about them? You know, if you feel that they're evil and fat cats and lazy and cheats and that sort of thing, then you're not going to want to be wealthy, are you? Because you know subconsciously your mind is saying, no, don't go near that. You know, I know my parents used to say things like, oh, money doesn't make you happy. Look at that rich man, he died recently and all his money didn't save him, did it? I mean, there was this I think Mike Lynch, the UK version of Steve Jobs, they called him, and he died on his yacht, tragically. A lot of his family members died, so this sort of tycoon dies on his yacht off Sicily. This freak sort of tornado comes up and swallows up the boat. Tragic accident, but I can imagine people saying, oh, his money didn't help him, did it? You know, all his money and all his wealth, look what it did for him. You know, that's a silly attitude, really. But what I'm saying is, if you feel like that about wealthy people, you're not going to want to join that club. And, you know, if your parents have always said, wealthy people are bad, oh, those wealthy people, they're not happy, wealthy people have heart attacks. You know, I used to believe that people in business, tycoons and business people, always, died young with a heart attack because they were, over their desk all day and then suddenly they drop dead or rush into an appointment. It's just not true. It's just nonsense. The wealthy people I know keep fitter, they keep healthier, they eat better, and it's actually the poor people who have more health problems and die younger on average, right? It's on average. So do check out my webinars. I'll go through the mindset as well of money. But let me know in the comments what you think about what I've said. Do you think, becoming wealthy is to do with mindset, or do you not? I mean, do you fear that if you became wealthy, you might lose it all? A lot of people do lose money. I've done this myself in my early career. I built up quite a lot of money, and then somehow it just went. So I do fear that. That's a slight thing in the back of my mind. I might lose it again. So it makes me a little bit cautious. Because there might be a downturn, that sort of thing. So look at your mindset, look at how you feel. A lot of people are frightened to invest because they're so scared of losing. But you've got to take some risk in life, to invest and earn more return on your money, because you're not going to really make it just putting your money in the bank. All the saving in the world and all the saving in the bank in the world is saving on which food you buy and which supermarkets you got is probably not going to make you wealthy. I'll tell you that. You need a bit more than that, and that's kind of what I go through in my webinar. So thanks very much for listening. Bye for now. See you soon. Check out my webinar and the other links in the chat. Thank you.